Welcome back to NextEra-Crypto-Ventures, my fellow crypto explorers. Today, we're diving deep into the core of the crypto trading universe, the battle of the exchanges. Now, if you're serious about growing your crypto portfolio, you need to understand the playing field. And that means knowing the difference between centralized exchanges, or CEXs, and decentralized exchanges, or DEX. Don't worry, we're breaking it all down step by step in plain English. By the end of this video, you'll be a CEX and DEX expert ready to conquer the crypto markets like a pro. Alright, let's start with the OGs of the crypto world, centralized exchanges, or CEXs. These are the platforms that might feel familiar if you've ever traded stocks. Think of companies like Binance, Coinbase, or Kraken. Those are your classic CEX. Essentially, they act as the middleman in your crypto trades. Here's how it works. You deposit your fiat currency, like US dollars, onto the platform. Then you can use that fiat to buy Bitcoin, Ethereum, Dogecoin, or whatever your crypto heart desires. The CEX holds those assets for you, making it super easy to trade them with a click of a button. And the cool thing about CEXs is they often have tons of features to make your life easier. We're talking user-friendly interfaces, real-time price charts, fancy trading tools, they've got it all. Plus, they often have massive trading volumes, which means you can usually buy or sell your crypto quickly without any price slippage. But here's the catch, and it's a big one. When you use a CEX, you don't actually control your crypto. Remember those private keys, those super secret codes that give you access to your digital gold? Well, with a CEX, they hold on to those keys for you. Now, some people are cool with that. They like the convenience, the security measures CEX have in place, and the peace of mind that comes with someone else holding their crypto. But others, well, they're not so comfortable giving up control. And that's where decentralized exchanges, or DEX, strut onto the scene. These platforms are all about putting you, the trader, back in the driver's seat. We're talking true crypto-to-crypto trading, no middleman needed. Think of platforms like Uniswap, PancakeSwap, or SushiSwap. These are your DEX heavy hitters. With a DEX, you connect your own crypto wallet directly to the platform. This means you keep those precious private keys tucked away safely in your possession. You have complete control over your funds, and no one can touch them but you. Now, DEX are powered by something called smart contracts, basically lines of code that automatically execute trades based on preset conditions. This makes the entire trading process transparent and trustless. You don't have to rely on a third party to handle your funds or worry about them running off with your crypto. Plus, DEXs are all about privacy. You usually don't need to go through any Know Your Customer or KYC procedures, which means you can trade anonymously. For some people, this is a huge plus, but of course, there are trade-offs. DEX can be a bit more complex to use, especially if you're new to the crypto space. And because they rely on blockchain technology, transaction speeds can be slower, especially when the network is congested. Let's talk about the elephant in the room: custody. This is where the CEX versus DEX debate gets really interesting. With a CEX, remember, you're trusting them to hold your crypto for you. It's like depositing your money in a bank. It's convenient, but you're relying on that bank to keep your funds safe and accessible. With a DEX, on the other hand, you are your own bank. You hold your crypto in your own wallet, secured by your private keys. No one can touch it but you. This is the essence of decentralization. You're in complete control. This is why you often hear the phrase, not your keys, not your crypto in the crypto world. It's a reminder that if you don't control your private keys, you don't truly own your crypto, and that's a powerful concept. Now let's talk about everyone's favorite topic: security. Both CEX and DEX have their own strengths and weaknesses when it comes to keeping your crypto safe. CEX are centralized, which means they can be juicy targets for hackers. We've seen it time and time again: exchanges getting hacked, funds disappearing into thin air. It's a risk you have to be aware of. That said, top-tier CEX invest heavily in security measures. We're talking cold storage for the majority of user funds, multi-factor authentication, and sophisticated security protocols. They want to keep your crypto safe just as much as you do. DEX, on the other hand, are inherently more resistant to large-scale hacks. Since your funds aren't held in one central location, there's no single point of failure for hackers to exploit. However, with a DEX, you're responsible for your own security. If you lose your private keys, and remember, these keys are like the digital equivalent of Fort Knox, your funds are gone forever. There's no customer support line to call, no password reset option. So, with great power comes great responsibility, my friends. Let's move on to another important consideration: privacy. This is where DEX really shine. Most CEX require you to go through those Know Your Customer (KYC) procedures. You know the drill? Uploading your ID, verifying your address, all that fun stuff. This is all about preventing money laundering and complying with regulations, which is understandable. But it also means that CEX have your personal information. And in some cases, governments or law enforcement agencies can request access to that data. DEX, on the other hand, are like the Wild West of the crypto world. No KYC, no identity verification. You can trade anonymously to your heart's content. This is a major draw for privacy advocates who want to keep their financial activities under wraps. However, this lack of regulation also means there's less protection for users. If something goes wrong, you're pretty much on your own. It's a trade-off you have to weigh carefully. Now let's talk about everyone's least favorite subject: fees. Both CEX and DEX will charge you a little something for their services, but how they do it varies quite a bit. CEXs typically have a maker-taker fee structure. This means you pay a slightly different fee depending on whether you're adding liquidity to the order book, making a market, or taking liquidity away, taking an order. These fees are usually a percentage of your trade, and they can vary depending on the exchange and your trading volume. DEXs, on the other hand, rely on the blockchain to process transactions. This means you'll have to pay something called a gas fee every time you make a trade. These fees can fluctuate wildly depending on network congestion. When the blockchain is busy, gas fees can be ridiculously high, making it expensive to trade. Another key difference is speed. CEXs are generally much faster than DEX. This is because they don't have to wait for transactions to be confirmed on the blockchain. When you place an order on a CEX, it's usually executed almost instantly. DEXs, however, can be a bit slower, especially during peak hours. This is because transactions have to be validated and added to the blockchain, which can take time. So, with all that said, when should you use a CEX, and when should you opt for a DEX? Well, it depends on your individual needs and priorities. If you're just dipping your toes into the crypto waters, a CEX is probably the easiest way to get started. They're user-friendly, they support fiat currency deposits, and they offer a wide variety of cryptocurrencies to choose from. If you need to trade large amounts of crypto quickly and efficiently, a CEX is also probably your best bet. They have the liquidity and the advanced trading tools to handle those high-volume trades. However, if privacy and control are your top priorities, then a DEX might be the better choice. You'll have complete control over your funds, and you won't have to hand over your personal information to a third party. And if you're deep into the world of DeFi decentralized finance, then you'll definitely need to use a DEX. That's where all the action is when it comes to things like yield farming and liquidity mining. Thanks for watching this episode of NextEra-Crypto-Ventures. Hopefully, you now have a much clearer understanding of the key differences between CEXs and DEXs. Remember, there's no one-size-fits-all answer when it comes to choosing the right exchange. It's all about finding the platform that best meets your specific needs and trading style. So, tell me, which one do you prefer, CEX or DEX? Let me know in the comments below. Until next time, stay safe, stay smart, and keep venturing forward in the world of crypto.